All right, hello everyone. Welcome back to a brand new price action study. Okay, it's recording. Cool. Welcome back to a brand new price action study. Today is Thursday, November 16th. We had unemployment claims today. We had the Philly Fed, and that was both at 8:30, and then we had a 9:15 news driver as well. All right, so here we are on our monthly chart. Let's go ahead and talk about the expectation. Currently, still bullish on the monthly chart. I'm not going to go too deep into this because obviously going over it every day really just doesn't make sense. But again, we are bullish here. So overall, we're continuing to expect lower prices, and I'm expecting price to dig deeper into that order block here on ES. For NQ, let's go ahead and see if it's the same idea. So we have seen price respect this monthly order block by tapping it twice, and we haven't seen a willingness to go higher. We've mohawked above it a little bit, but ultimately we are seeing reaction to that. Now, if price shows a willingness to continue higher, we are seeing a break in structure in the form of it actually trading above these highs here. So trading above these highs, I'm not sure if this is a form of distribution since we do have this intermediate term, trend here where we were seeing higher prices day after day. We'll see if price wants to go for these untested highs, but ultimately, for now, until we get indication otherwise, we are still bullish on the monthly. All right, for the weekly, it's the same idea. Okay, here we go. Tap into the order block, tap into the order block. We're going to see how price reacts. All right, let's see here. And so here's the monthly order block, and here's a halfway point. So for ES, it's very apparent that we're going to continue seeing higher prices, and we also have these highs here, which price has taken out this week. Okay, and we also have again this right here, this little imbalance. All right, so we're gonna go now. I'm gonna drop down to our lower time frame chart or higher time frame chart. I also learned about rejection blocks today, so that's what some of the backtesting I'm gonna be doing here. Let's go backtest higher time frame. Cool. All right, and here we're on the daily and Q. Okay. So as you can see, here's my target. Still bullish. We are seeing price consolidate a little bit here. Each of these candles, of course, represents a day. All right, so just looking at where price is right now, for where we've currently been going or where we've been seeing like higher prices. All right, we have taken again, these stops back here. We filled in this range, but we do have these highs. Today we actually traded above those highs with this aggressive wick. Sorry, that wasn't today. I'll say 2 days. That was Wednesday the 15th. Okay, so that was actually yesterday. Now, additionally, we do still have these highs back here. Just that. Or do we? Nope. Did take those highs as well. And then we have the untested high on the monthly. So for this, again, what I was kind of framing there is this is a tap and a tap respecting the halfway point of the monthly order block, and then this is obviously the high. Okay. So we'll see what price wants to do here, but ultimately, we'd be expecting higher prices until we see indication otherwise. All right, so that being said, now we will go to ES. I have some of these framed, but here's what we're going to be essentially looking for, okay? So I'm going to explain this really simply, what I learned. Okay, we're going to be looking for a rejection block, and so what that means is when price essentially returns to a level, we're going to see it reject. Now we're going to actually study this concept and see, does it work? So I have a few examples here, but I'm going to also do that on NQ because I haven't marked any of those at all. What we essentially mark, we actually mark the low of a body after a intermediate term trend, whether it be an upside or downside trend. So here we see price continuing lower for the span of about a week. Okay, price creates this low here, and then we see that in the form of a swing high, with this candle being the one in the middle. We have the higher one to the right, higher one to, or sorry, swing low, sorry, higher candle to the left, higher candle to the right, and then the fourth candle here. Okay, what we do then, we have to make sure the bottom of the swing low or the bottom candle has a wick, and then we measure the range of the wick. So that's what's outlined here. What we anticipate then is price to trade back to that and reject off of it and continue higher. And we see that here. Okay, now additionally, we have another example. So this is the same thing. Now we can see that this the bodies themselves don't actually trade above, right? But ultimately we come up here, okay, we create the swing high, we have a lower candle to the left, a lower candle to the right. By the way, it doesn't matter if these are bullish or bearish. Just to note that as well, like this candle could be bullish as well. It just matters the actual pattern itself. All right. Anyways, we mark out that range. We can see price actually digs deep into it, and what does it do? It reacts lower, goes for the stops below here. Actually, this is a rejection block as well. So you have the body of that low that formed here, and then the price actually trades to that level and then rejects off of it. Now, with this, this was actually consolidation, so I don't know if I would necessarily consider that, but we're still looking for the same pattern. Anyways, all right, let's keep going. So, same thing here. Create this swing high, higher low to the left, higher low to the right. We have a candle with a large wick. Measure that out. This is probably from a lower time frame, but I believe this was the 4-hour. Because, I mean, for that, at least on the daily, you can actually just see, yeah. Okay, so what we're seeing here, we have the actual body creating the high, all right, and this is the swing high, all right. Then we mark the wick high down to the body, and we see price trade exactly to it and not above it after we have this trend that had formed. So we have it initially form here, okay, then it goes lower, creates these lows, all right, and then eventually we see price return to that, and when it does, it takes buy side with the actual wick itself. We trade back into that rejection block, see price trade lower for, that was what, about, say about a day here in candles. So this is from the 25th to the 26th. So yeah, about a day's range here. All right. After that, we do see aggressive movement to the upside because price is moving towards, a higher time frame objective. Okay, which we can see here. But again, we're on a 4-hour. And so essentially that's the idea behind it. All right, let's go back to the daily. And see here. I don't know if I had this one marked, but now this has to be something different because that doesn't even make sense. Why would mark that level? I think I may have just marked that on accident. But anyways, all right, it's the same exact thing here. So we have this low, higher low to the right, higher low to the left, higher low to the right. Okay, we actually mark the body or the low of the body. Okay, and this is after a intermediate term downtrend. Okay, so and it also trades below this low. Okay, and that can also be into an order block, just so you guys know as well. But anyways, we measure that range out. Price does trade back into it, and after it trades into that range, okay, that would be like our trigger, and then we see price continue in the opposing direction for about a day. All right, now price trades to about like the halfway point of this volume imbalance and then continues lower and creates this low. Okay, now for this low, I didn't see it actually form here, and let's see. And then I wasn't really able to see anything after. I looked through a little bit. We can see still like normal runs for buy side. I'm just simply looking for those rejection blocks. So now let's go ahead and go to NQ. Do the same exact thing. So I'm just going to be looking at, where we had significant trends upwards or downwards. And then I'm going to be refining the idea. Okay. So let's see here, and we'll mark the body of the swing low or swing high, whatever it is. Okay. So this, where was the close? 14209.50. Okay. So this literally trades a point below. This is a rejection block, like literally 0.25. So if I had a limit order precisely at this down close candles low, and then I was able to anticipate that in the form of we have a higher low to the left and right, and also where we are. I'm not sure what objective. Okay, this was an imbalance as well. So we also know that a fair value gap can also act as a form of resistance, or you may not know that, but this would also be the same thing. It's going to be hard to see here, but let's go to like, if we go to a 1 minute, you'd see it. All right. May not even see it here because it's just a single point. Let's go down. Yeah, I'm going to go to a super low one. Try to see if I can find it. Make sure. 7.5 and then, okay. So now we've refined it because I actually had the level marked out wrong. And then, here we are again. Okay, so now you can kind of see it. You may not be able to on YouTube, but just barely. And again, that's marking the close of this candle. So the close being 14209.50, and then the low here being 14209.75. Okay, so afterwards we see an aggressive movement to the upside, trading to this void here and trading above these relative equal highs. We then see a retracement. Price actually goes below these lows here, and so we'll mark the body of this low. Okay, keep in mind and so here I'm still gonna mark it out, but I mean it's pretty obvious that the bodies trade lower as well. And so the idea here with the rejection block is that for a failure swing, all right, or for like buy side liquidity to be taken and for us to then see a rejection off that, that doesn't have to just be with like this. Like for example, like we have these highs form here, we see price take that, and then we see a small form of retracement into the previous range that was created. So we don't always have to see the actual volume trade above that high, and that's really the idea. Okay. So, to go ahead and wrap up, I'm going to continue studying this. It's getting pretty late, so I'm not going to continue doing that tonight, but it's something that I'm going to go over in this week's price action and study. All right, ultimately, just understand, what I've been saying and what I consistently keep saying. Not much has changed. If we look at, today's range, we can see that we had this very, kind of consolidation range. So, this would actually be a form of distribution and also accumulation in the sense of when we consolidate or when we see this sideways range, we actually have orders accumulating on both sides of the market. Now, actually, before I close this, okay, we had that's 1, 2, so about 16 hours here. So this was an intermediate turn downtrend. Okay, we marked the lows of the bodies, and I might have done it wrong. Let me see. Where's the low here? It's 1.5. Or sorry, that one doesn't have it. Let me make sure. So the low here is 15871, or sorry, 15831.75. Okay, actually that doesn't count. That does not count. But yeah, ultimately still holding on to my bias, still expecting price to trade to my target. Gonna leave it at that.